For years, the trust gap in Nigerian insurance was less about the product and more about taxes. President Bola Tinubu's assent to the Nigerian Insurance Industry Reform Act (NIIRA) 2025 officially moved the sector from a fixed-sum era to a risk-based future. Before the signing into law of the act in the past, when a company went under, the policyholders were often the last in line, but Nigerian Insurance Industry Reform Act (NIIRA) 2025 has changed the equation. Under Section 212 of the Act, a dedicated protection fund was established to be funded by the industry, which will warrant every insurer and reinsurer to contribute 0.25% of their gross premium income to the safety net. Speaking on the new law at the workshop for journalists in Abuja, the Commissioner for Insurance, represented by his Deputy Technical, Usman Jankara, said Nigeria's march toward a $1 trillion economy is no longer a mirage, but reality.
The Insurance Policyholders Protection Fund comes in not only when you are being liquidated, even when a company is still in existence but runs into trouble, it then plays the dual role of AMCON and NIIRA. And so whatever is given as loan to a company that is troubled has to be paid back.
He said NIIRA is also enforcing a dual capital test to ensure that companies hold either new fixed minimums or a risk-based capital amount, as always proportional to the weight of the risk it carries.
As we speak right now, NIIRA has not verified any of the companies, so no company can be adjudged legally to have complied. Because we're seeing the recapitalization exercise as what you see at the airport, a scanner. And we're insisting that whether you are big, whether you are small, whether you think you have complied, you must go through that scanner to be so confirmed as having met the minimum capital requirement.
Some in-house facilitators spoke on the importance of NIIRA 2025, noting that admitted claims, unlike in the past, must be paid within 2 months of notification.
Insurance is all about pool. Small money, all of us to save together. When something happens, we use out of it to make sure we bring the person back to where it is before. Because it's all about pool. So we said, look, rather than giving the money to agent and then they will not say they are completely transferring. No, the money should go straight to the underwriter. Mind you, that does not mean the agent are not recognized. The agents are also extension of an underwriter, but they must be licensed. All agencies to have their own license. We have license for insurance agents, we have license for underwriters as well.
The economy is saddled, is as safe and as important as the robustness and quality and soundness of its insurance sector. So that is why this instrument, the NIIRA, is very important, and operationalizing and implementing it is very germane to the achievement of the $1 trillion economy.
Presentations at the one-day workshop are consumer protection under NIIRA 2025, mechanism and benefits, and operationalizing the Nigerian Insurance Industry Reform Act (NIIRA 2025), strategic priorities and implementation roadmap for enhanced industry growth. CNN News.